Is it worth cancelling a current insurance plan? In this episode of Rate My Plan with Biscuit, we're reviewing a policy sent to us by Mr. Harrison. Harrison is 49 years old, married with 2 young children, and he has an investment-linked insurance plan with a 22-year term. He pays a fixed 1,000 ringgit per month, and his plan covers life and total and permanent disability to the tune of 750,000 ringgit and critical illness of 600,000 ringgit. Harrison bought this policy 4 years ago during the heart of the pandemic. But even with a postgraduate MBA degree, he found it difficult to decide whether this policy was a good buy in terms of coverage and premiums. He wanted to know if he should continue with this policy or not. Let's rate it. First, protection. Included in the 750,000 ringgit cover for life and total permanent disability is a personal accident rider that can pay up to 400% of the sum assured. When the plan matures, the account value will be paid out as well. Since Mr. Harrison has 2 children, we usually recommend having at least 500,000 ringgit of coverage per child, more if his wife is not working. So ideally, he should have a 1 million ringgit cover at least. So for his life protection of 750,000 ringgit, we give it 2 biscuit. Next, critical illness. Misleadingly, the critical illness coverage in Harrison's policy is termed a health cover. His plan just pays a lump sum of 600,000 ringgit if Harrison suffers one of 36 critical illnesses, like stroke and cancer, with extended cover that includes paralysis, blindness, or loss of independent existence. That's a critical illness cover. At the age of 49, we highly recommend that Harrison have a critical illness plan, and 600,000 ringgit is a decent number, so for critical illness protection, we give his policy 3 biscuit. Next, medical protection. We have to say that Harrison's policy is very misleading in describing the critical illness benefit as health cover. In fact, the policy does not provide any insurance for hospitalization and surgery at all. So for medical protection, we give it 0 biscuit. Harrison, if you haven't already, please make sure that you get a true medical plan that covers hospitalization and surgery. We recommend one with a high annual claim limit, say 1 million ringgit, and with no lifetime limit. You can get this for about 170 ringgit per month. Next, let's look at simplicity. Harrison can access almost all the information he needs online, which makes it easier, although he will need an agent to make any changes. However, because Harrison's insurance policy is investment linked, it is more complicated than necessary. So for this, we give it 1 biscuit. Finally, let's talk about value. Usually, we recommend a yearly term life insurance policy for the best value. But for Harrison, that might not be the best choice. Yearly term insurance premiums increase every year starting at a very low price. This is great, especially for young people. Over time, they pay less overall. However, Harrison is 49 years old, and we found that if he opted for a new yearly term life and critical illness insurance, his premium for that will exceed his current fixed premium of 1,000 ringgit per month in 4 years' time, when he's 53 years old. So switching to a yearly term policy would eventually cost him more. Indeed, his current policy's premium is actually quite reasonable for his age group. So for these reasons, we'll give it 2 biscuit for value. So Harrison, please do not discontinue this policy. Sure, you have paid your agent about 15,600 ringgit in commissions over the last 4 years, and you have another 3,600 ringgit to go. But given that you've already invested and the alternatives will get expensive in a few years, we recommend that you stick with it. But don't forget to get your separate medical protection. You're not covered right now. That's it for this episode of Rate My Plan with Biscuit. Keep sending your policy details to hello@fi.life. Until next time, bye.